One. Oh no.
Oh no.
All right, we are live. What is going on, fellas? Another week of Layer1Live. How we doing?
Oh, we're doing pretty good. Thanks for letting me go second, Deem. I appreciate that. Is that Deem though? It's you got a small screen on my computer here. It looks kind of like Deem, but like maybe a previous version of himself or something.
Yeah, I went back in time before I had the beard. So yeah,
What's the price of Bitcoin from wherever you came from?
Well, yeah, that was the whole point. It's like $100. So.
Ah, nice.
That's honestly our breaking news for the day. That Dima shaved his beard. He's gonna look completely different on Dimitri's desk. So we'll see if the guys recognize him at all. But yeah.
Yep. It's just gonna be a bright like white light at the bottom of the chart as the light reflects off your face.
I'm gonna paint the beard, man. Like
yeah, there you go.
I'm gonna have like the Santa beard, you know, like that's
we were saying before we went live that Dima just doesn't look as trustworthy now. So take that into consideration. No, I'm just kidding. But yeah, we got a great episode for you guys here today. A lot of news. This, even though it was the holidays with Thanksgiving here, at least in the US, there has been a lot going on, a lot of rumors swirling around. But before we get into some of the breaking news, just an update. Last week on Layer1Live, we announced a $250 Bitcoin giveaway. So essentially what's going to happen is up until the end of the year, so I guess there's about 4 weeks left now, we're going to be selecting one person each week who is the most engaged with all of the content that Layer 1 puts out. So we've obviously got Layer1Live on Monday, and then we do a podcast. Generally comes out on Wednesday. We've got Dimitri's desk once or twice a week. So we've got a lot there that you can follow along with, either live or comment and let us know what you think after the fact. But essentially, the 4 or 5 winners that are chosen at the end of each week are going to go into kind of a lottery of sorts and have a chance to win $250 worth of Bitcoin. So like I said, this started last week on that episode of Layer1Live, and the winner from last week is guy by the name of Barry Dutton. So congrats to Barry there. You've got an entrance into the giveaway.
Yeah, absolutely. And Barry, I think he was commenting on all of our YouTube videos. I think he shared the podcast with a couple of his constituents or I guess colleagues is probably the better term there, unless he's sharing this to his followers. But anyways, we got a couple house cleaning things here. Top 5 countries by listens stayed relatively the same. So we have that America, Australia, UK, Germany, and Canada. Top 3 episodes, we had Edge Wallet with Paul Puey. This was this past week. And then number 2 was Tim Ogilvy from Staked, and Ryan Dennis is still pulling in the views from Tron. So go ahead and check those out. As far as upcoming guests goes, we have Tezos this week. That should be dropped on Wednesday. So 12/4, and then December 11th and December 18th, we have Kava Labs. We have Brian Kerr from Kava Labs, as well as Alex Warren from IDAX. So that looks like the schedule for the upcoming week and the week beyond that. So yeah, it should be a good month, man. You guys ready?
Some good episodes for sure. I'm ready, man. How was the Edge Wallet? I got to listen to about half of it. The guy is something, man. Smart cat.
Yeah, that one was amazing. It actually goes really well with like what's going on right now in crypto. Like as soon as we had that interview, we had all these like breaking news of like Upbit getting hacked, and all these issues, right? And we're just like talking to Q. Like I was talking to Q, and I was like, dude, we just talked about this with him, like, and because we've talked about like. Well, people don't really care, like if it's centralized, exchange and like they store their money there because like, we haven't had like exchanges hacked in some time. And it's like, boom.
Like 3 separate exchange hacks. Yeah.
Yeah, exactly. So no, that one is great. I love that interview.
Yeah, Paul had an interesting story because a lot of the people that we've had on the podcast have had like, oh, I got my PhD in this, and although he, had a good background as far as his education is concerned, he kind of went to NVIDIA and then took a break. So he was working at NVIDIA doing these processors or graphics cards, GPUs. and then he took a break and then came back into tech, to which I was wondering why the hell he didn't become like a Bitcoin miner, having that background in NVIDIA. But it was a pretty cool conversation, man. He's all about having people control their own assets and being safe and secure in controlling their own assets. So that was a super cool episode.
Yeah, but before we hop into some of the breaking news here, one question I want to pose to you guys, and he might have touched on this in the latter half. Maybe you guys asked it and I missed it. If so, my fault. But do you guys think NVIDIA is mining Bitcoin themselves? I mean, they're making all these chips, these processors. I mean, they're going to be at the forefront of kind of the latest technology. I'm sure there's a setup where you could kind of roll GPUs in and out and mine, even if it's not Bitcoin, maybe some other cryptocurrency kind of as a additional revenue model.
NVIDIA is a publicly traded company, correct?
Yeah.
So wouldn't they have to like kind of tell that to their investors that they were doing that?
Yeah, that's true.
That's one, but two, we did ask that. We asked the question on like, are the guys there that work there? Maybe they're doing it on the personal level. Are they mining? By themselves? Because they can probably have a pretty good setup. But he told me that most people don't do that because it's actually not profitable. Like he said that on a personal level. Remember, he mentioned that if you do the math, it's actually like not profitable, like to mine, on just like a small rig. So yeah.
Yeah, that's a super good question though. I think people within the company could probably find themselves having a side project of some sort. But yeah, I think like I guess NVIDIA could technically roll out a mining arm of their company, but I haven't seen anything in public yet.
No.
Yeah, they're making so much money on the chips and processors and whatnot that it's like why even bother with it?
The analogy that you always like, sell the picks and shovels, right?
Right. Yeah, exactly.
Yeah, man.
100%.
Cool. Well, let's get into the news. I had the first one here. I had U.S. arrests Ethereum developer for training North Koreans to evade sanctions. So this was a story that made the rounds within crypto. The guy's name is Virgil Griffith. I think he's one of a core Ethereum developer. He had asked, I guess, I don't know who was it again who he had asked, but he had asked to go over to North Korea to kind of take part in this blockchain conference. I think they initially denied him. Do you guys know who he asked?
It was some sort of U.S. government agency.
Okay.
Maybe Homeland Security, whoever kind of. I mean, you can't really fly to North Korea, I'm guessing.
No.
Like, how do you get there?
Yeah, so the report says by way of China, he was able to get to North Korea. So obviously he went there anyways, and upon returning to the United States, he was then subsequently arrested by the U.S. government. I know the FBI had initiated the warning, to which he then did it anyway. So he was at a blockchain conference. This was the Pyongyang Blockchain and Cryptocurrency Conference, and he was kind of giving a speech about how to, and I don't know the obviously specifics. There is no recording of the video, of course, but it was specifically made in the complaint that he was teaching North Koreans and North Korean officials how to evade sanctions through the use of blockchain. So that is pretty much the story. I know, Vitalik weighed in and kind of, signed the petition to have him obviously released from custody and all these things. But yeah, definitely a tough discussion. I want to hear, what you guys have to think about this subject.
Yeah, good. Go ahead, Dave.
No, you go.
Man, I was just going to say, like, good luck, Vitalik. Like, there's no way you can't. I mean, it's so blatantly obvious to me that you can't work with a country like North Korea to do something that is so directly against the U.S. and the things that they're trying to do to combat, North Korea and the terrible things that they're trying to do. I mean, it says in the article, it says that, essentially the kind of the affidavit, I guess, that came out about Virgil said that after the DPRK cryptocurrency conference, Griffith began formulating plans to facilitate the exchange of cryptocurrency between the DPRK and South Korea. So it's like, it doesn't sound to me like he went to this conference, some guy came up to him, was like, hey, how do you do this? And he was like, oh, this is how. It sounds like he saw some sort of opportunity to make money from a bad state you know, took it upon himself to do so, and now, you know, he's going to be behind bars for some time.
Yeah, that's tough. You know, I wonder how much like a booth would cost at that conference. You know, it'd be interesting.
Your freedom.
You know?
Yeah.
You know, like, do they have sponsors? Like, did Consensus put this on or what?
Oh my goodness.
So
ICO
anyway,
box put it on, I think.
Oh wow. Oh, the ICO box shade. Okay, awesome. I love it. I love it. Yeah, but I mean, honestly, I don't know what this guy was thinking. I think a lot of people, especially within the cryptocurrency community, kind of feel like they're like, we have that idea of self-sovereignty all the time, but this is still a world that's governed by rules. It's governed by laws that are appointed by the government. So I really don't know what he was thinking here, but I think a lot of times they feel kind of untouchable in that aspect.
You know, honestly, like in his defense, like, you know, when we read these news, right, and they say like, oh, basically he was, you know, working on helping them do like, you know, evade restrictions and so on, like to money launder and so on. But, you know, maybe he was actually just teaching them the blockchain cryptocurrency, and they use that technology to do that stuff. It's not his fault, right?
Mm-hmm.
Like, he's teaching, like, you know, how to use this stuff, but not, you know, for the purpose of them, you know, doing money laundering. You know, it's kind of like, you know, you have to think about it. Like,
yeah.
Maybe that was the situation too. You know?
Gotcha. Yeah, and if you guys are there, you know, listening at work or listening at home, please leave some comments. We want to know what you have to think about this as well, so we can, you know, talk about it on here. That's always the best discussion, when we can kind of go off the rails a little bit. So I appreciate you guys tuning in. So we've got the next topic here. Mike, you got the Q3 2019 money laundering
kind of
report?
along the same lines. Our partners, the Black Venture Coalition, tweeted this out. So shout out to Tyler or Philip there for doing this. I hadn't come across my desk beforehand, but basically there's a company, we've talked to them before. It's called CipherTrace, CIPHER Trace, TRACE, who is, you know, pretty top of the top when it comes to, you know, on-chain kind of forensic analysis. It's essentially the same as, you know, your forensic accounting, but for on-chain analysis. And they came out with this, as you said, cryptocurrency anti-money laundering report, which is in depth. I mean, it's probably 20, 25 pages at least. Highlights some key topics in Q3 that included, you know, some of the kind of interesting news around Plus token, which we'll talk about a little bit later in the episode. Talked about privacy coins a lot, which I want to get your guys' thoughts on, kind of how those are, you know, affected by increasing regulation around cryptocurrency. But all in all, the report really focused on kind of those two main topics. That obviously all the scams and the hacks and things like this that still exist in crypto today, but then on some of these new guidelines around privacy in crypto. You know, we talked about it before, where, you know, Bitcoin is kind of pseudo-anonymous. And if you're buying your crypto from exchanges and you know, you're registered there on the exchange, you're verified, you know, and then you send that Bitcoin to somebody, like it's very easy to track the fact that you sent that Bitcoin. So, you know, essentially what CipherTrace is saying is that this new FATF, FATF, kind of coalition of sorts with over 30 different countries, is starting to tighten the screws on exchanges and on privacy coins, and just on KYC in general within crypto, basically to the point where CipherTrace broke it down, and it was something like over 60% of exchanges are not compliant with the various FATF or FinCEN regulations that exist today. Not is kind of hard to tell in the data. But it was a great report. You know, the main question I have for you guys is, you know, as we see more and more kind of instances of privacy, whether it's related, kind of popping up in the mainstream, you know, you've got Apple talking about how their phones are more private. They're not going to sell your data, blah, 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 all this. But then you have regulators kind of tightening the screws around privacy. Like crypto battling privacy? Do you think it'll just kind of fizzle out and you know, some people get in trouble, some people won't? What do you think, Deem?
Yeah, good question. Can you guys hear me fine? I think I had some issues with my internet connection.
Yeah, that actually might be you, Mike. So I don't know if you're connecting, but I think we both lost you on that question. So could you re-up that question?
Yeah, for sure. Basically, what I was saying was, where do you guys see privacy intersecting with crypto? In the sense that you have so much of today's time focused on data privacy, data rights. As things become more digital, privacy continues to deteriorate. You have privacy coins in crypto. Now you see all these kind of regulations clamping down on non KYC instances of crypto. Kind of like, where do you guys see this going? You guys there?
We might have lost Dima there. Uh-oh. All right.
We got some
technical
issues.
Dima, you still there?
Yeah.
All right. He's struggling. No, he's struggling there with his connection. But as far as privacy is concerned, I think a lot of people have issues. Oh, we're all leaving. Okay. I think. Okay. Goodness gracious.
What happened?
Yeah, we're having a ton of technical issues, but I guess Mike's question was where is that intersection between crypto and privacy? Yeah, so I mean the way that I would see it going forward is I think we are starting to get to the point where governments are going to start releasing their own digital cryptocurrencies based on their own fiat kind of currencies. So I think that in the long run, I think there's going to be a ton of situations where the government's going to be able to more easily track their currencies. So what you have when you have cash, when you have gold, things like this, they could be relatively untraceable when you're transacting peer to peer. And I think although people in blockchain like to think this is going to kind of release the bonds of government control, I think a lot of times blockchain in cryptocurrencies can actually increase the control that you have when you have things like this.
Yeah, no, for sure. And then so Mike is basically to add to your point is that with that in place, that's where the privacy coins are going to become more and more popular. But the problem is that privacy coins are like, they sound great, right? They sound amazing, right? They give you protection and all those things, but it's just like on paper, it can be, but it can be used for bad things, right? So it can be used for money laundering, sponsoring terrorism, and all those things that
all these things that fiat currencies currently do.
Right. Yeah. Exactly. Yeah. But see, that can be done for privacy coins as well. So I think that there's a positive side of it, obviously, and there's also the dark side of it. I guess the fiat can be done, but it's not but it's not as efficient as it could be done in the privacy coin market, I think.
It's less digital, obviously.
Right. Yeah. So even though we like privacy coins, we like privacy, and we don't want government to watch over our financial spending and all those things, right? But at the same time, you also have to have some kind of oversight, man. Like, you have to have that oversight in case the terrorists get sponsored to do, bad things in your country, or whatnot. So there's got to be a balance in this.
Yeah, balance is key for sure. I mean, it's tough. I don't really necessarily know where it goes. I think long term we see privacy improve for folks, especially around money. But in the short term, it's hard to say what's going to happen to some of these privacy coins or some of these exchanges who just kind of seem like pennies in front of a steamroller. And don't really have kind of a lot of power to do much against those regulations. I mean, even if you look at some of the privacy coins like a Monero, right? Like, very sufficiently decentralized. They just came out with a update that makes it even more decentralized. Yet there are still very public developers of Monero who could be targeted, even though they're not, CEO or something like this. And it's not to say that those are weak points of Monero, but in the same way that exchanges are on ramps and off ramps, or developers are ones that are pushing the code forward, if you lose all of these things in a privacy coin, forget about speculation, just, thinking about general utility, it obviously harms the long-term chances of the project if now everything has to become anonymous and whatnot. So yeah, it's like I said, it's a great report. Hopefully we've got the internet fixed here a little bit. I plugged in the Ethernet for you, so hopefully no more issues. But kind of on to some funnier news here.
Yeah.
There's a great Twitter account and some drama between Poloniex and Tron. What's going on there, Q?
Yeah, before I get to that really quick, I want to go through the comments that we've gotten. Rivers in the chat, he said, hey, guys. We had Tyler in the chat when you actually shouted him out. So he said, hey, guys,
nice. Thanks
for the shout-out. Dima, I like your plants. He had a question. He actually had a couple questions that I'll get to here in a second, but Evan also chimed in and said, Mike's YouTube stream getting hacked while he's talking about the government and privacy. Coincidence? I think not. So that was a good comment. Thanks for showing up, guys. Tyler's questions, let's go over it really quick. He said, question of, I've been thinking about, fast forward 10 years, how will we handle identity? In crypto in general, most people say you can be your own bank. If people are their own banks, do we need some sort of identity and KYC at the protocol level? So I don't know if you guys have any thoughts on that. I will certainly chime in as well.
One of the interesting pieces of that report we were talking about was that as it kind of went into details at the end of it about each privacy coin, a lot of them had features that allowed you to turn on or turn off privacy, or allowed you to, in the case of the sender, I believe it was, showcase the actual transaction, right? So these privacy coins are hiding who's sending them, the amount, the receiver, all these things. The transactions necessarily aren't able to be read on the blockchain. So if there is an aspect where, for some reason, the government or some sort of, the police or something says, hey, we suspect that you're involved in, I don't know, some crime, right? Prove to us that you didn't send this money to there, and you have the ability to do that through the front end of the blockchain, then that might be a solution. I could see that happening, but kind of broadly, I mean, as things become more digital, it's going to be harder for that identity not to just exist out of convenience. Like Facebook shows us that, as everybody and their mother and literally their grandmother go on Facebook, there are digital imprints of, what they're interested in, where they're shopping at, the ads are showing up for that reason. So if you kind of take that few steps further, it's hard to imagine identity not just showing up because there will be a convenience factor around, creating your own digital identity.
Yeah, I'm going to piss off some maybe not Bitcoin maximalists, blockchain maximalists here that believe in, down with the government. But we had Paul Puey on the podcast last week, and one thing he talked about was this idea of trust, or I guess the term is not trust versus verify, but he used it. So trust versus verify, meaning that most of the blockchain and cryptocurrency users will rely on verifying rather than trusting people. But his idea was that, human civilization is kind of evolved through trusting other people. And so what you have when you have like, let's say we bring identity into the fray, now you have the ability to have reputation within that space. So if you bring identity, you bring reputation, and humans evolved along this line to trust certain people based on that reputation. The example he used was going to Home Depot. Whenever he goes to Home Depot and picks up a piece of lumber, he's not, verifying. If he has to verify each piece of lumber that he picks up to then take back home and do with whatever he's doing with it, build a house per se, that's an inefficient process. Instead, he trusts that Home Depot is not, jousting him or getting him, something like that. So basically, what comes with identity is reputation, and that's what I'm actually looking forward to. Although it can be used incorrectly by the government and things like that, we've seen what's not. But reputation is going to be something that's huge within the next 10 years. So super interested on how we deal with that.
Yeah, I think pretty much covered all the bases on that.
Yeah, absolutely. So this crypto deleted tweet, this is something real quick. We had Justin Sun tweeting out, and honestly, it might not be Justin Sun, but it's through the Poloniex Twitter exchange, or Poloniex exchange through their Twitter. They tweeted out, "Let's buy Tron" with a like smiley face, which obviously is not a good look for the Poloniex exchange. We've been talking about the acquisition by Tron of the Poloniex exchange for a little while, and the fact that they're tweeting out "Let's buy Tron," obviously morally that's not the best thing that they can be doing. But yeah, just a little quick hitter there. What did you guys think about that?
I like the comments. If you go to the tweet itself, the comments are absolutely hilarious. It's just GIF after GIF after GIF, and it's important to note that, like, I guess, the rumors that we talked about many episodes ago were that Justin Sun was an investor in the new Poloniex. So I don't know if Tron fully acquired Poloniex, but to your point, based on this tweet, it seems to be he's a major investor, and
maybe just running that account.
Yeah, maybe Reddit. Like, it's just you're right. I mean, it's just not a good look for what used to be a trusted exchange.
Yeah, no, for sure. That's a little silly, man. But I didn't look at the comments. I gotta go back and look at the comments. It seems to be like,
they're fire.
Is, but yeah, cool. So if you guys ready to move on, we got interesting news from a Chinese exchange called IDAX. The CEO, basically the guys at IDAX, came out and said that the CEO disappeared. So they said, "Hey, our boss is gone with the cold wallet. So for now, we're just gonna stop the withdrawals and deposits on the exchange." Now, IDAX is not really like a huge exchange, but if you look at their volume, like I just looked today, they did like somewhere like 700 million or something like that of trading volume. But again, it just comes back to the fact that, like, you have an exchange and then you have just one person that controls this like cold wallet. And then, we had something like this, somewhere like not exactly the same, but remember we had that Canadian exchange, right? Where I guess
the guy died.
Yeah, exactly. Did he die or not?
Yeah, right.
But like the point is that there's no like a second tier like safety feature where, like, if something like that happens, if the CEO of the exchange gets hit by a bus, like what? Like, that's it, So this happened with this Chinese exchange, IDAX, where the CEO actually just disappeared. He just left, and nobody knows when he's going to come back or if he's ever going to come back. So that's an interesting piece there. Hopefully he does come back.
my favorite part about these decentralized exchanges are that they're not decentralized at all, obviously. Yeah. So one of I think we had a comment really quick. Ola Art says the problem is centralized exchanges manipulate the markets. Eventually decentralized exchanges will take over. That way many issues with privacy will be resolved.
Yeah, decentralized exchange. Decentralized is obviously a big word. I'm realizing that in almost all of the breaking news topics we have here, 4 out of 5 are all just completely shitting on crypto exchanges, as is the next topic. But so get ready for that. But yeah, I mean, it's IDEX. I feel like has always been one of those Chinese exchanges where maybe there was like some giant $200 Bitcoin arbitrage opportunity or something like this, where only the riskiest of traders would kind of jump in there. So it's not the it's not the biggest surprise. It's not like Armstrong disappearing off the face of the earth from Coinbase or something. But yeah, I mean, it just kind of goes back to the fact that as the commenter said there, like, even though Bitcoin's 10, 11 years old, we've all been around for a while now, the same issues keep popping up. Whether it's Quadriga or IDEX or anything, it's mind blowing sometimes.
Mm-hmm. Yeah,
For sure.
some of what we talked about with Paul as well was this idea that people are going to want to have someone else do things for them, like for example custody assets. So I'm not honestly bought in on the belief that decentralized exchanges will eventually control the most of the market, because most people, as we increase the adoption of people who aren't in that front 10% of early adopters, those people are the type of people that want someone else to custody their assets. So I'm not completely sold on the rise of decentralized exchanges, because people don't want to put in the effort to hold their own assets.
Right. No, for sure. We definitely covered that topic with him. So, we keep referring to that episode. It was really a good episode, guys. Definitely check it out. But as Mike is coming back, we're going to jump into the next topic, which is something that, I've mentioned before, where, when are we going to have these like mergers and acquisitions in crypto, right? In our industry, right? When are we going to have a period? Because, when we're going to have like this period where we have a bear market where these companies are basically starving, and then the good players are the ones who are picking them up, or maybe things are starting to turn around and people are starting to cash out and sell their companies to competitors, consolidation period in the market. And then this headline came through where Coinbase basically made an acquisition of Tagomi, I think that's how you pronounce it. We mentioned these guys before on a previous podcast, where they basically got a deal with Binance, where Binance became a liquidity provider for Tagomi, which is just like a essential cryptocurrency broker. And then like this CoinDesk releases a piece about how Coinbase is acquiring this broker for 150 million, and then like I don't know, maybe it was like an hour after, or it was pretty quick that. Basically said no. Actually, both companies came out and said there was no merger or acquisition that basically happened between Coinbase and Tagomi. I don't know what you guys are talking about. And CoinDesk is like basically saying, well, our source told us, but I guess the source is not, correct. So it's big train wreck for both companies.
Yeah, I feel like the elephant in the room in a lot of this stuff is the fact that journalism in crypto is still kind of very small, and I think we've seen with the Block and now CoinDesk, there's a ton of reports only in the past week that are getting refuted as they come out from the sources from these journalistic publications. So yeah, as far as the story goes, Mike can talk on that, but I'm just looking at it from a different perspective of this is the second time in 2 weeks that we have a supposedly reputable journalistic publication coming out and getting it wrong.
Yeah, it's got to be the most frustrating thing for a massive news site like that. I mean, CoinDesk is huge. Who knows what happened behind the scenes? It seems to me like another source kind of thing, where that source is no longer a trusted source. But it would have been very surprising. I mean, basically, as Dima said, Tagomi's a brand new kind of crypto broker of sorts, where whether it's Tagomi or it's Bitsyin's another one that we've talked to before. There's a handful of them out there who are basically targeting various hedge funds, various institutional investor types, aiming to get them to come over to their platform so that they can kind of act as this execution desk of sorts and plug them into their various trading software, with the thought that then as crypto grows, they're kind of the leader in this space, and as it becomes more institutional, they'll end up being one of the first and largest kind of crypto brokers. So kind of having talked to Tagomi and some of the same folks there, and understanding kind of where their users are at, 150 million would be pretty nuts. Would be very exciting for them after only a few years, but yeah, definitely hard to believe. It's it's a wild world out there. Don't believe everything you hear on the internet, for sure.
And now I can't believe anything Dima links in our Telegram chat, because it could be fake news.
Yeah, I was the one who actually broke that story. Yeah, and you're the one who put it out. That it was like, wasn't it like not true? And I click on it. I was like, no way, wow. So yeah, that was pretty interesting. Thing that happened. But anyway, hopping into BTC futures. If you guys are ready.
Yeah, go ahead, man. You're on a three-peat right now. Let's go.
I know, man. Basically, Bakkt BTC volumes continue to increase. Like, we continue to mention that. And Mike shared something interesting. It was a tweet out where it just talks about, just in general, how much is being traded in futures markets for BTC. And it's been trading 5 billion every day in futures market for BTC. And actually, if you look at the tweet that we had, that Mike sent out, it actually shows that majority of the volume comes from like exchanges like OKX and those other Asian exchanges, which is kind of also you might want to think about what is behind that volume, if it's credible or it's not. So, but just in general, 5 billion is a pretty huge number. And just for like, let me see, right before the Thanksgiving, we traded 40 million on Bakkt. If you look, you can see the actual futures from trading from CME on that chart as well. So overall, I mean, it's great, to see futures becoming more and more useful in this industry. And you can see that actually gets reflected in the price discovery that I've been talking about. It's smoother now. So rather than having like ridiculous rips, like up and down, crazy volatility, now we're having actually a steady increase or decrease in price, and it smooths out the whole process overall.
Do retail investors want that?
Yeah, I mean, of course, why not?
I feel like a lot of guys that were in crypto in 2016, 2017, we were all kind of like campaigning for institutional investors to come into crypto. And I think we, at the same time, we were experiencing like 10x growth on like small little microcap coins, or even like some of the bigger tokens, you get 2 or 3x. And that rarely happens anymore. And that has a lot to do with institutions coming into crypto. I feel like it was kind of like a Trojan horse a little bit. Everyone was like making tons of money, and then you're talking about the industry and the market's maturing because of institutional coming in and not having these crazy fluctuations where you can make 2, 3, 4, 5x your money in 2 weeks.
Yeah, but you can also have things crash like 80%, which is like not normal at all.
True.
So it's like there's a good and a bad side to it. For sure. But yeah, I'm excited for the futures. I cover that on the desk, almost every single time. So I'm definitely going to talk about it tomorrow, about the futures, because there was actually an interesting thing going on with the contango and backwardation, as it relates to the spot price of BTC. So there's interesting stuff going on there. I'll give you guys a little teaser. So yeah, that's pretty much it for BTC futures.
Nice, man. Nice. Okay. Well, I've got a pretty interesting story that has come across and made its rounds in the community the past couple days. This is the HEX token, in what claims to be the first blockchain certificate of deposit, in our industry's history, which you could kind of say that that's a wild claim. But basically what's happening is this well-known guy named Richard Hart is having a Bitcoin snapshot. So basically, if you own Bitcoin, in the same way that we had that Edgeware snapshot, where if we kind of, and it wasn't necessarily a snapshot, that was more of a locking of tokens. This is more of a Bitcoin snapshot where you can get HEX in return, and then stake that HEX, and you make a percentage of the HEX token based on how much you own of that percentage that's staked. So again, if you have 1% of the entire HEX token, supply staked, you get 1% of the returns, and the returns are based on ETH being signaled to this HEX to then receive it again. So they're mining HEX, and then the people that get in early are receiving that percentage of HEX token. It's basically a huge ass Ponzi scheme, and it is. The earlier you get in, the more percentage of the supply that you're getting, and yada yada yada. But it raises an interesting point, and the point that I want to make is this guy this guy Richard Hart, is he doing something that's unethical by creating something, that's going to be traded on the open market, but that the free market is going to determine the price? Because that's his argument, correct? So like he's creating this, essentially decentralized finance application where you can stake and receive a percentage yield on this HEX token, and then that token is then traded on exchanges. You can make the sale, and people can apparently buy it, obviously. Is that unethical for him to do? Because that's what's being pointed out. It's basically that he's creating this, he's doing a great job marketing this essentially Ponzi scheme. What do you guys think about this story in total?
Deem, I want to know what you say here.
Yeah, I don't know, man. This, even though, see, there's a lot of things actually in that industry where we come up with tokens, and then basically, it's then released to the market, and then it's determined by the market what the price is. So in that sense, like, yeah, I understand, like, he's trying to make his point, where it's like, hey, it's a free market, you just do that. But the way he has a structure, and he's also marketing as a new CD, as you mentioned, right? Which is like, what? That's definitely not, how it works. So you basically get in this token, which has no value, just made out of whatever, and you hope that some investors are going to trade it, which in the end, really what it's going to come down to is most people just liquidating it or trying to liquidate. But if there's no liquidity, nobody's buying it, everybody's just selling it, then you just, you basically just locked up your ETH or BTC for no reason. And getting interest of this HEX, like, that has nothing to do like with anything. Like, it's just, I don't know, man. It sounds so bad. And eventually our industry is going to mature, and we're going to look at this stuff and be like, hey man, like, we're not going to deal with this BitConnect again.
Yeah.
Go ahead, Mike.
It's tough. I mean, just looking through this article at some of his quotes talking about kind of how it works. I mean, so are you locked? It looks like you lock it in a smart contract, and he's saying that it's trustless and all this.
Mm-hmm. It's essentially a DeFi application like we've seen with many, where you're locking up. So like I lock my EOS into a smart contract, and I receive a percentage yield based on that. So for example, like he's locking HEX, and you're receiving HEX in return, and then selling that on the open market.
But what is HEX? Like HEX does
right.
What is, I mean, again, like, this is why I wanted to have this debate, because what is Dogecoin? Like, Dogecoin is nothing. It was created, as we know, out of a meme, and then now it has a market cap of what? I would have to go on CoinMarketCap, but so what are all these things that could potentially be memes or potentially be nothing? Why do some turn into something and some don't? So that's more of the philosophy that I was.
Didn't Doge have like actual like dogs and stuff attached to it? Like those?
No,
I don't think so.
What, like you get a dog if you have a Doge?
Certificate of dog.
So yeah. And the main criticism is that this guy Richard Hart is going to have the majority of HEX tokens, so he's going to have the majority stake.
Shocker.
So when someone participates by and I need to look into this and see how the actual like I think transactions are then going to the HEX token holders. So let's say you're the first person to get in, you have 100% of the staking on that network. The second person pays some sort of transaction. You get a percentage of that, which is that 100%. And then now they're staking, so you get a 50%. So the earlier you're in, the better. Hence why everyone thinks this is a Ponzi scheme.
Yeah, it sounds like some of the kind of gambling staking setups as well, but even worse. I mean, the thing that worries me the most is that if anybody, and again, I haven't looked into this fully, but if anybody's locking up BTC or ETH or anything like this in some sort of smart contract that this guy, and this grows in popularity, that's going to be a giant honeypot, where I mean, basically it's pretty clear. If he can pump HEX and he's got the majority of the tokens, he's just going to dump them on everybody whenever whenever it's at a price that he's comfortable with. But kind of the broader market implications, are that if this is a scam and people are locking up their BTC or their ETH or their EOS or whatever, and then there's some sort of hack, then you've got selling pressure over a significant amount of time. That's going to hurt the price of whatever was hacked there. So, not to say that's the case. I mean, if you look at the picture on Cointelegraph, the dude's got like a Willy Wonka hat on, and it's just
right.
It's trustless.
Yeah, and he has a beard too, man.
And I know this is the FUD episode, but again, why is Cointelegraph running an article on a clear Ponzi scheme? So
clicks, bro. We're talking about it.
Yeah, exactly. There you go. But so that's it for the HEX snapshot of BTC. Should be interesting to see how that goes forward and how long it survives, because I doubt it lasts very long. But
yeah, pretty much along the same lines of shitting on crypto exchanges here. So obviously Upbit was hacked. There was about $52 million worth of ETH that was stolen. This is something cool that we see in crypto. Essentially the hacker began transferring the funds out of the wallet into kind of various other exchange wallets and whatnot. And all of the major exchanges, will be Binance, everybody, Coinbase, basically comes together and says, hey, if we see any of this ETH deposited onto our exchange, we'll freeze the account immediately. So, just in summary, essentially 342,000 ETH had been stolen from the Upbit hot wallets. The South Korean exchange said that they would replace the funds, but again, as we were kind of talking around the HEX piece, when you have that kind of volume in one asset, and if you don't see a lot of volume on the market, it's going to be negative to the overall price with that much selling pressure. So it's hard to say whether or not that ETH has being sold, but this organization of sorts that has stolen this ETH, seems to be moving it, seems to be trying to sell it. They're calling themselves 1337. That it's kind of this group or this person that stole it. So they've labeled themselves 1337. They seem to be looking for somewhere to cash out, but yeah, in line with the FUD episode, that's kind of the latest news we got on the Upbit hack. Kind of moving right along here, an interesting proposal that came through. This is another Cointelegraph article. Obviously ETH has been in the news around Ethereum 2.0 coming out, some of the scalability problems that will supposedly fix. There's essentially a product development team that claims they have made ETH block production twice as fast. This came out last week. It's from a company called Akomba Labs, AKOMBA, where basically they are saying that they ran a 2-week test measuring the results of running, this new blockchain distribution network on the Ethereum network called Blocks Route, and they were able to cut the time that it takes to propagate a block, basically in half, which would mean you can push more transactions through. You can, supposedly reduce the amount of congestion on the Ethereum network and, hopefully solve some of the scalability issues they have. So, we've seen some other kind of layer 2 solutions for ETH. We've seen them for Bitcoin. Everybody seems to be working around pushing scalability forward, at a time when I guess ETH 2.0 is kind of one of those things that everybody's just constantly waiting for. So thought that was a cool piece of news. We'll obviously link it, you guys can take a look, but you guys have any thoughts on those 2 points?
So this is a layer 2 on top of the Ethereum network. Is that what you're saying?
It's what it seems like. Yeah, I didn't dig into the actual kind of network as they call it, but yeah, it seems to rival some of the other layer 2 scaling solutions.
Yeah, that.
2.0.
Yeah, that's fair. That's a good question. Did you hear that, Mike?
Mm-hmm.
Oh, okay. Yeah. So
when ETH 2.0, is that what he said?
Yeah. Well, you didn't laugh.
Yeah.
I expected you to laugh now. Yeah, I think what we see, across most networks in the industry right now are these the existence and the creation of all of these side chains and parachains and all these things that are trying to create scalability on top of already scalable networks too. Like you've got EOS, I think Polkadot on Ethereum obviously is a great example of one. So super interesting to see all these parachains or side chains or sister chains, whatever you want to call them, pop up.
Yeah, no doubt.
Speaking of EOS, what do we got there, Q?
Yeah, I want to. So before we get onto that, I did want to ask you, like, I feel like in 2016, 2017, 2018, possibly, it was kind of the creation of all of these base layer chains, as you would kind of see them. So you've got Ethereum, you've got EOS, you've got Tron. Obviously, there's a ton of others, IOST, and things like that. Is it better to, now that we see kind of the rise of these parachains or the rise of these layer 2 solutions, do you think that's a better solution than creating an entirely separate chain and trying to create your own tech and from like the bottom up? What do you think?
I would say so. Yeah. I mean, you don't then have to kind of build the community from the ground up, It was kind of a question that I posed to Ben from Nervos in one of the episodes we had with him where, certainly they want to stick with proof of work for a lot of the security, enhancements that brings essentially. But, one of the questions I was trying to get at with him was, why kind of start over? Why not just, try to facilitate increased security on ETH as it moves to proof of stake? And his answer was obviously, well, proof of work over everything. So I think it's kind of a mix between people favoring scalable solutions and also people just wanting control, people wanting the opportunity to kind of launch their own project, make a ton of money, be super successful, become a big kind of crypto figurehead. I mean, if you look at kind of protocols across the board or projects across the board, the ones that have any sort of kind of user traction seem to have all this like transaction and congestion, issues with scalability. Whereas then the ones that don't really have any, transaction issues or congestion are talking about how scalable they are. So it's like, okay, well, what's better? Is it better to have users that can't use the network, or is it better to have a network with no users? Where do we go from there?
Yeah, 100%.
Yeah, that's a fair point. And speaking of, a network that's dealing with obviously transactional problems at the moment, although I guess producing 12,000 transactions a second could be seen as good and also seen as bad if that's like if you're running out of resources from a certain way. But we've got Scatter 12 that just launched yesterday. So Remy, the founder of Scatter, tweeted out that Scatter 12 was launched. They got the new website. They have this new software. They didn't have a blog associated with it, so it's not clear what actually comes along with Scatter 12. I didn't actually download it myself because you're gonna if it's new software and it's not just an update, you got to import your private keys and do all these things that I'm not ready to do yet. So I'll plan on doing that within the next couple of days. But that's a huge move. Scatter's done a great job. They've been my primary asset and tool when interacting with the EOS blockchain. And I think that things like Scatter and wallets like Scatter, interfaces like Scatter are going to be super important as you're talking about adoption. One of the things that I'm going to talk about here in a second with this CPU model proposal from Dan. But Scatter's been great. I really want to shout out Remy. Hopefully we can have them on the podcast shortly to talk their experience. I know they're a block producer on EOS now, so they've been a outspoken member of the EOS block producer community, especially that Western community that's not in favor of the cartel that's happening right now. But do you guys use Scatter by any chance?
Yeah, I've used it before. I haven't used it as of late, but I remember as EOS was really coming out, and you had a lot of various airdrops from EOS happening. That was huge, because otherwise, yeah, I mean, to your point, it's like how do I kind of go about accessing these tokens or whatnot? It seems to me like even if it's not EOS, whoever kind of whoever completes kind of the front end enhancement, if you will, for a blockchain, whoever does that first and decently enough seems to just dominate. Like it seems very hard. Maybe it's just because traditionally users are lower on within crypto, but Scatter, I mean, are they still the top dog pretty much for EOS when it comes to that kind of front end?
Yeah, I would say so. Blocks.io has a great interface that you can like interact directly through desktop. I would love to hear what the commenters have to think if they use another one. I know Link's wallet was always one, but certainly Scatter's one of the main wallets that the community uses for sure. So yeah,
Gotcha.
So we'll get on to this Dan proposal. So as you guys know, there was this whole issue with CPU resources on EOS after this kind of ETH token that people were spamming transactions, essentially transacting the network, meaning that although in this model that we have now, if you own 1% of EOS on the network, that technically gives you 1% of the network's bandwidth, essentially. Certainly those are a ton of tokens. So that's, that is always going to get you the ability to have transactions. But the way that Dan had set this up was for it to be dynamic. So essentially, if you owned 1% of the tokens on the EOS network, but that EOS network wasn't being used, you would have more bandwidth. So essentially, you would have 1%, but if it's not being 100% used, you would have more than 1%. You'd be free to transact. So that helped people that were staking, 50 to 100 EOS to get some transactions out per day. But when that system is pushed to the brink and you own 0.00001% of the network, you're not going to be able to get a transaction through. Because that was set up to dynamic. So the next step would then be to go to REX, which is already an issue in and of itself, because now you're involving the user in an interface that is ridiculous for just any average user to use. But if you didn't have the CPU staked, you would go to REX, you would purchase. One EOS would get you a certain amount of, like right now, I think it gets you like 1,000 EOS worth of CPU. And then you get that back over time. The resource exchange obviously like allows the lenders of EOS to get, I think, like a 1% APR. So there's a little bit of DeFi mixed up in there. But anyways, long story short, Dan's proposal is to remove this system completely. And I actually love what he proposed in that 1%. So let's say you own 1% of the EOS, on the network, that no longer guarantees you a percentage of the network. It's going to be a fee per transaction type of model where, now, unlike Ethereum, where the user is essentially purchasing. So if I'm sending you Ethereum, I have to, if I'm sending you Ether, I have to purchase a transaction of gas and all of these things. What Dan's proposal is doing is pushing this onto the dApps and the wallets. So, for example, if somebody wants to transact, they have to have that dApp purchase now CPU. So that's going to be the model going forward. There's definitely a lot to unpack there, but essentially CPU is going to be purchased on a rolling basis now. In that purchase, so let's take Scatter, for example, although it's not the greatest example because they don't have much revenue. Under this model, Scatter would purchase an amount of CPU. That CPU would then be used by their users so that users don't see the CPU or net or REX at all. So now they're just creating transactions. It's all being handled by Scatter. Now the difference there being right now, Scatter would stake EOS. So if they have $10 million worth of stake in EOS, they're essentially not going to have any issues whatsoever because they can get those transactions through and with no problem. The issue there is for a new dApp coming in, maybe
Right.
a revenue producing dApp, they would have to stake a shit ton. Now under Dan's model, they're paying, and that pay is going to a percentage of all EOS stakers. So did you guys?
Man.
Yeah, it's not as complicated as I'm making it sound. Essentially,
Sure.
what you're having is the dApps and the wallets paying for EOS or CPU, and that payment that they're making is going to EOS stakers across network wide. So that dApp could even be a staker itself and fund its own processing.
Oh,
Right.
interesting.
Yeah, does that make sense?
That requires
Yeah.
a barrier of entry. Like that's the problem, right?
But-
So it's like,
Go ahead.
for the new dApps to get in, you basically have to bankroll, and make sure that you have enough, rev to support.
You do, but that's already an issue now, because if you come in now and you want to create a dApp, you have to stake that EOS. So you need to have 20,000 EOS or 15,000 EOS. What this does is kind of like a pay for play model. So say you have 10 users, and you don't need to make that many. You don't need to have that much bandwidth on your dApp. Then you don't need to pay. You don't need to stake X amount. And then again, there's this cycle model here where if you do stake, so that dApp could stake and then receive a percentage of what it's paying the network to rent, for example.
So will the current model still exist? Will this just be an addition, or will this be a full replacement of the staking for CPU and what's the other one? CPU and
net. It's a full replacement, but it's not like a okay, on this block it's completely changing. It's something that's going to be needed to shift out.
Right.
There's a lot more to unpack there. One of the analogies that I liked in the comment section was, in the current model, your EOS is like a house, right? That you can live in, you can use, right? The more real estate you have, the more you can do with it. I can do whatever I want if I have 10,000, EOS. Under this model, it's like an Airbnb that you can't live in. So you can stake, your EOS. You can, obviously receive a return based on that, and Dan has that economic model pointed out. But you can't necessarily use, that EOS for CPU on the network anymore. It's not like you stake 1% and now you have 1% of the network. You still have to, if I want to send a transaction, hopefully, and this is the debate here, things like Scatter need to front that for me. So if I use Scatter and I pay $5 a month to use a subscription on Scatter, I can send to you, not have to worry about CPU, not have to worry about net or Rex. In that way, Scatter can continue to purchase the CPU on a rolling basis for its users.
Yeah, I guess that's the biggest fear, right? Is that what happens if we get to another crypto bear market where companies are going out of business, and these are the companies that are responsible for basically providing the resources that are required for people to send their EOS or their tokens. It just, I mean, it could become an issue. I kind of see where he's going with it, but it seems to me like a classic solution that then is going to solve some problems but create new ones. Where let's say now it's Scatter, Links, and Blocks are the only three that have any sort of revenue. So now basically all of the EOS transactions are dependent on, three companies, right? Is essentially what would happen.
Yeah, well, in that case, you, the user, there would probably be like a back end way that you could, or it would be on the front end just hidden, like under something called advanced or something like that, where you could yourself purchase CPU. You see what I mean? Yeah. But it's just going to be on that rolling. So let me read it from Dan's really quick, Dima. So he said classic, because there was a ton of blowback. People kind of, as Dan writes, it's kind of complicated because his mind is very very interesting, and obviously he's close to genius level if there is one. Daniel Larimer from his Twitter, ByteMaster7, classifications on EOS resource proposal. It is fundamentally a simpler and less complex system than the REX. It could solve underperforming block producer issues by sharing a part of the rent with the producers. So if you have EOS and stake it, you can earn some from rent. If that earned EOS is used to rent CPU, then on net your transactions are free. This is coming from like a dApp's perspective or a block producer's perspective. On a fee per transaction model, you greatly complicate user experience, and in practice would reduce network throughput with the extra token tracking required. Fee per transactions can still be offered by wallets with a service provider that rents CPU and charges to accept first auth. So again, Dan's really talking in the clouds here, but at the end of the day, he says the rental system is for use by apps and services and not by the end user. And that's the thing we need to take away from this proposal. He's trying to remove buying CPU, buying net, and having to deal with the REX from the end user. And one of the ways he does that is by removing REX and having a steady supply of CPU. So all CPU is used at all times, and you don't have this fluctuation of that CPU price that you see with REX and all that stuff.
Yeah. Yeah, I mean, I can see the blowback. It's tough to see how more issues won't come up. I mean, that it's funny, like when we see ETH struggling, or we see EOS like trying to fix the resource stuff, or we see, you know, other chains struggling with whatever problems they have. Like it brings you back to Bitcoin and kind of like the very simple, elegant solution that they've created, you know, where whether you want to move $10 or $100 million, you know, it's the miner setup they have with mining blocks and the transaction fees that miners are supposed to receive it's just, you know, it's clear, it's simple, it's very elegant, you know, when kind of looking at some of the, not competitors, but I guess just other solutions out on the market. So
yeah, it's certainly a long-term solution here, and I don't think we're going to see anything within the next couple months. Maybe they do get themselves together, like the BPs get together and say this is the proposal we want to work with. But that
was going to be my next question. Yeah, is so what has to happen for that to take effect?
Needs to be passed by the top 21, as anything on EOS does. But the top 21 have shown an acceptance of, you know, their responsibilities, whereas most people kind of believe they're a cartel. I guess that's an easy word to use. It's an easy word to describe them, other than kind of like trying to break it down to what it actually is. But
right.
They're not a cartel, at least up to this point. They've been pretty accepting in the proposals that have gone forward.
Gotcha.
Yeah.
Deem, any other thoughts on that?
No, I think you guys covered it pretty well. So,
yeah. At the end of the day, I like the proposal. It takes the CPU, it takes the net, all that shit, and it removes it from the user experience altogether. Puts it on the DApp, puts it on the services. Now the difference is I don't know where Scatter pulls in its revenue right now. It's definitely the block producer. So I think that's Dan's plan, to make block producers more, if each EOS is used to purchase CPU for a certain amount of time, it's not staking. You don't get it back. You're actually purchasing. Certainly that's revenue going out the window. But if you have, EOS staked, you're receiving revenue from the network as well. So hopefully that's like a self-fulfilling prophecy. But I could see a thing like Scatter, charging subscriptions. Hey, you need to, pay a certain amount a month so that we can support all the transactions.
Well, and exchanges aren't going to want to, they're not going to want to have to pay for people to send transactions either. I mean, a lot of that is off chain, but the exchanges who are also those that control the vote are not going to, if it's now their responsibility to cover the transaction fees instead of the user, I mean, I guess they'll just create a system that ends up charging the user anyway, in the same way that, like, if you withdraw, 100 BNB from Binance, they take, 0.1 BNB as a withdrawal fee. So
that's,
it's interesting.
It sounds, again, we keep coming back to this. So it's like, it sounds good on paper, but it's like in practice, we have to see how this happens. True. And this continues to happen with, like, EOS and proposals that they have, where it sounds like, oh, this sounds amazing on paper, right? Like, that's much better. But once we have it in practice, then we start finding out, certain issues, like Mike, what you mentioned,
right.
Changes,
So.
The good news, just to put a bow on this, that EOS situation where there was a ton of EOS or CPU that was bought up in this EOS contract situation, that has been released. So now the EOS congestion, as they called it, is kind of freed up a little bit. So there's EOS to be rented, CPU to be rented within the REX right now. So we're clicking on all cylinders. Yeah. So
nice. Well, on to another project here, Tezos. I've got a point here, and then I know Deem's got one. So we talked about it a little bit in the past. Obviously, Tezos has been in the news recently because the price has gone up while the price of everything else has gone down. Listen to some of the previous Layer1Lives, to kind of get our thoughts on why that might be happening. But I guess evidently there's been some rumors in the Tezos Telegram and kind of some FUD going around that Tezos is going to get looked into by the SEC. And interestingly enough, one of the lead lawyers for, I believe, the Tezos Foundation basically came out and said that no, as far as he knows, that the SEC is not looking into Tezos. We haven't, heard anything from the SEC. Essentially, what is happening is some of the original investors in Tezos, I'm assuming these are large institutions, probably not in the U.S. I'm gathering, who invested in Tezos with their Bitcoin or their ETH. It could be regular citizens who are just kind of this conglomerate. They're basically suing Tezos, saying that the price is not good enough, and they want their money back, and they want the compounded money that they could have made on the BTC or the ETH that they would have made from whenever they contributed, which at face value is one of those things where it's like sorry, you made a bad decision, you kind of got to live with it here, but at the same time it can be something that just is a giant pain in the ass for the project or the foundation, because it never kind of goes away. You don't want, as Tezos, you don't want to settle with folks like this, because then you get more people kind of coming out of the woodwork asking for money plus interest plus maybe they contributed when BTC was 20K or something, and or 1K or whatever. So just if you've been following Tezos, we've been talking about it a little bit. Obviously, it doesn't seem like there's really too much kind of behind those rumors, too much to worry about. But obviously Tezos is one of the projects that has not had kind of the greatest track record when it comes to lawsuits and whatnot. So
you know who this happened to also? Similar thing happened to XRP. Remember when investors were trying to sue like Ripple or XRP, and they're trying to a similar thing, and that didn't go anywhere. So it sounds like a similar type of event.
And it usually doesn't. It's usually, I would imagine, pretty damn hard to convince a judge that through all of the disclaimers that you should have read when investing in Tezos, that somehow there is like negligence or something like this where you deserve your money back plus whatever. The issue becomes when you have so many thousands of investors hitting up a regulatory body like the SEC saying, hey, let's take, for example, Kin, right? The Kin ecosystem, but in the Kick messaging app, where it's very clear in the white paper, they said, hey, the price will not go down. This is going to moon, all the cardinal sins, right? You have all these people sending the SEC that it's very clear that is not what you want. So, just to be clear, I don't think there's kind of much behind this. It just seems like some angry investors who are trying to get some free money out of a settlement.
Did Tezos have an ICO?
They did, yeah. They had a big ICO. They raised $300 million or something. But there were issues with the way that it went down. Basically the chair of the Tezos Foundation said that the developers and whatnot weren't kind of going about things like they should. So he said that he wasn't going to give any money out. He was just going to hold all the money in Switzerland or whatever. So then there was all these giant issues. Nobody thought the mainnet would get launched because there was no funding for any of the Tezos developers. And then I believe it was the founders. It's a husband and wife, basically out of their pocket and out of their own, blood, sweat, and tears, helped launch the mainnet. They got the situation with that guy resolved. They obviously, kicked him out, put in a new chair, and certainly things have been flowing since.
So why haven't they settled with the SEC yet?
Well, no. Again, it's not the SEC; it's private investors, right?
Yeah, I'm talking on like a broad term, like subject here. Like if they raise this money through ICO, they're a huge, obviously, company within, the cryptocurrency industry. We see SEC coming out and laying down settlements. Why haven't Tezos kind of gotten this out of the way?
But they haven't been a target though, right? I mean, we haven't had SEC really.
Are we just assuming they're not going to be targeted then?
I mean, there's nothing like, I guess the issue with EOS was the marketing to U.S. investors, right? They had like the giant billboard in Times Square and all these various things, and they were kind of under investigation for some other things as well. But I mean, today we haven't heard anything like the SEC is targeting Tezos. I mean, I think it is. It's not too much of a leap to think that if the SEC is going after high-profile ICOs, that the SEC would, look to settle at some point. But again, at this point, there's nothing from anybody, either inside or outside of Tezos that can, concretely say the SEC is looking into Tezos.
Got it.
Yeah.
Cool. On the other news for Tezos, we got Binance adding margin trading on Tezos. So now you can 100x Tezos. About this price being pumping, man. You got to get in. Not a financial advice, just kidding.
Hold on, I got to go.
So basically Binance is adding margin trading for Tezos. It's actually good. We see continuously Binance adding more margin trading for tokens that are actually doing pretty good volume. And Tezos, with this pickup in price and volume, looks like that warranted them to add to their margin trading, which is going to be interesting because we up like 60% right now in for like last couple of weeks on that price. So we'll see how margin trading is going to affect that once it's going to be on Binance, and the volume, how it's going to be different now also on Tezos. But just a little bit of an addition there for Tezos as well for Binance.
Got it. Yeah, moving on here. So on the IOST front, some kind of interesting news here from IOST, and then I'm going to put my tinfoil hat on, as I often do, and kind of circle the wagons when it comes to the rumors that I've seen. But we got some interesting news from IOST. Last Layer1Live, we talked about them being, basically forming a partnership with a Japanese energy company. They got some nice coverage on that. They were on Yahoo Japan, and things seem to be moving along with Japan. But on the China front, where I want to stick with the tinfoil hat, the CTO was at an interesting conference in a part of China called Hainan, I believe is how you pronounce it, Hainan. There were basically heads of government agencies or kind of organizations that were now focused on blockchain. The mayor of the province or town or whatever you want to call it was there. The mayor of Hainan. It seemed to be like a pretty well done event if you look at some of the pictures. I mean, it looks like a pretty well-to-do conference. It wasn't just kind of like a meetup at a Chinese WeWork kind of thing. So I saw that, and I was kind of trolling around Twitter, and obviously the news around blockchain being a big push in China has been at the front of everybody's mind. We've certainly talked about that here, but I started to see I saw something from the block about how now essentially, interestingly enough, has joined this Chinese telecom and finance, kind of alliance, if you will, to form basically a state-backed blockchain alliance, right? So again, if we circle the wagons here, China's focus has been on blockchain. It hasn't been on cryptocurrency. So when you see a cryptocurrency exchange giant, somebody who is kind of back and forth as the number one crypto exchange in the world between Huobi and Binance, when you see Huobi join, various members, let's see who it was here, China's equivalent to Visa, UnionPay, China UnionPay, other state-backed telecom giants, China Merchants Bank International, and then WeBank, which is backed by Tencent. So these are very clearly massive state-owned corporations that Huobi is partnering with. So I saw this and I was like, oh, that's strange. Then at the bottom of the article, you see that Huobi officially announced its Chinese headquarters in the province of Hainan. So did a little bit more digging, and an interesting account going by the name of Crypto Godfather. So it ends in an A, not in an ER. So take that for what it's worth. But it's basically a breaking news tweet here that the OKCoin founder was on a major Chinese news television talking again about this Hainan province, basically talking about a Hainan entrepreneurship zone. So you've got IOST who travels to this conference. You've got Huobi who, quote unquote, officially announced their headquarters there. You've got, the OKCoin founder talking about it on mainstream Chinese news. And this account essentially went to suggest and kind of rumor mill that China is going to quote unquote give the okay for Huobi and OKX to exist as the only two kind of Chinese approved cryptocurrency exchanges. I think a great piece of news, if we could ever get it from China, just for crypto overall, would be that China legalizes cryptocurrency trading. I would think that would pump the markets pretty significantly. But having seen kind of various, three various parties all talking about this one region, which if you look it up, it's basically a small island off the coast of China, right by Vietnam. It looks very much like a Malta setup. There's palm trees and beaches and all this. I thought it was interesting. So, I like my tinfoil hat rumors. I was right on the Poloniex and Tron partnership, so I'm 1 for 1 there. But definitely wanted to get your guys' thoughts on that.
Is that why we see all these exchanges getting hacked and disappearing? Suddenly that could definitely be it. I don't know. That you definitely did some good investigation work there.
Well, I mean, like we talked about before, the IDAX, IDAX, not Alex, who we're going to have on the podcast from IDEX. The IDAX CEO disappeared, just off the face of the earth, and they're obviously an quote unquote unregulated Chinese exchange. So, it's a weird time.
Yeah, if we have something like that happening, like behind the Iron Curtain, where everybody sits down and they're like, okay, this is what's going to happen. We're going to have 2 exchanges and that's it. Meanwhile, these other exchanges are just like, well, I mean,
yeah,
we're going to head out, like,
right. All right. I'm going to head out. Yeah.
Yeah.
It just seems like there's going to need to be like a significant change in the way the world works. And I know that's like super broad, but in order for these decentralized exchanges to ever have traction, there needs to be like a significant amount of people that want to use this service. And then the fact that like, I don't see governments, especially governments in China, governments in Russia that have a history of kind of state sponsored and, obviously are pretty heavily censorship, focused. I just don't see them ever allowing these other exchanges to ever take hold. How there needs to be, it's hard to even conceptualize how something like that could come out of China unless I know there's a couple in that one YouTube video that we watched, Mike, Peter Zahan, where he was talking about like the macro like political play and stuff like that. He doesn't think China will be a centralized state here in like the next 10 years. He thinks it's literally going to destabilize and it's going to, turn into a bunch of little different provinces. At least that's what he thinks. So if that happens, maybe we see a different play. But I just don't see how.
Yeah. Decentralized exchanges, I mean, for better or worse, I think are pretty much dead. I know somebody commented about that on the YouTube channel earlier. The problem is that when you have number one, basically every country in one way or another, whether it's because they're an authoritarian regime or they're trying to combat terrorism financing or drug trafficking or money laundering, like you would see in the U.S. Or Canada or any European Union, name it. Right, when you have the majority of the largest GDP, producing countries in the world, saying that these things have to happen in order for you to exchange these digital assets. And those things that must happen, are basically summing up to equal that the exchange is not decentralized. Again, I don't care how you market yourself. You can market yourself as decentralized, and you can kind of do things that increase the decentralization of your exchange so that if, in IDAX's point of view, if the founder runs off, everybody's not screwed. There are things you can do to increase decentralization, but a pure decentralized exchange, to your point, I don't see ever, getting to the level of these centralized exchanges that we see today.
Yeah, you'd need in order to run anything that has to continuously have maintenance, has to continuously upgrade, all of these things. You have to have people behind that, whether they work alongside it on like a DAO kind of situation or they're behind it. Like you said, that those are all failure points. Those are all attack vectors that can be easily clipped up. So yeah, man, that's great reporting that you did there. Trying to figure it out. So Huobi and OKX, those are going to be the big ones going forward. That's your guess. There's not going to be a
bottom line. Yeah,
I would guess. I mean, if obviously, like I said, most bullish scenario, whether it's now or in 6 months, whatever it may be. Hopefully, timing works up with the Bitcoin halving. But bullish scenario to the max is that China, they come out with their digital RMB and whatnot. They, I saw today that they're launching like an oil pipeline with Russia. That's one of the first ever, right? So it's very clear that China is moving away from a lot of the trade that they have traditionally seen. They're trying to open up new ways to kind of avoid things like tariffs or sanctions or whatever the case may be. So, if you have this digital fiat currency, you have this push for blockchain, and then you as a state can control the trading of cryptocurrency and work with, the two of the largest cryptocurrency, exchanges, not only in China, but in the world. Now, kind of China looking down is probably in a comfortable scenario where they can say, okay, we're not too worried now that, say, money is escaping China through the use of cryptocurrency because we're
regulating
pushing. Yeah, we're regulating it. We're pushing forward blockchain innovation. We're going to be the cipher trace of China. Looking to see where this money's moving. I don't think it's that far off that scenario could be the case. The bearish case is obviously that they feel like that's just too much hassle. They want to put their fist down. Huobi, OKX, gone. Basically, Binance is being chased after. Basically crypto as a whole in China starts to become a no more. That is obviously the most bearish scenario. I would guess we probably fall somewhere between the two. That's kind of how I see it.
Gotcha. All right, well, I would say we've got like 5 minutes left. We're running a little bit over as far as where we are in this episode. I think Dimitri might have just cut out there. Dima, I've got this. Okay. So we got to kind of lightning round this, but the last question I have there, Dima, if the Chinese government can kind of work in tandem with Huobi and OKX, can they be almost like let's say 6 months down the line, they've got this partnership worked out. Who knows how nefarious that is, where they have their fingers. Could they be in charge of listing and delisting of pairs on those exchanges? And then could they keep out tokens that they don't want to see traded, on those exchanges?
Yeah, absolutely. 100%. It's like, well, forget about the privacy coins. That's going to be gone. That's probably the first thing that's going to be delisted.
It's fair. Gotcha.
But yeah, no, for sure. I think they China, in the end, they see the opportunity, and obviously, if they can seize and control it, have kind of like direct kind of surveillance over it. Why not? So.
Got it. All
what
right.
A weird time for crypto right now, man.
Mike, we got to go lightning round on these last couple points.
Yeah, definitely.
Yeah.
I'll take the staking one here real quick. So anybody who's interested, we talked a little bit about Harmony in the past. They're a newer blockchain, kind of like an IOST, but they released their token economic model. Staking ratios have been something that have been a big kind of talking point. They're aiming for 35%, which if you're out there, if you want to, look at being a block producer or a validator basically for Harmony, it looks like you can make somewhere between 4 and 14% on those tokens. You'll need, a few million in order to do it, it looks like. But we'll obviously link that article there so that you can learn more if you're interested.
Interesting. In the last piece of news that we have here for Binance BNB, just really quick, if you go to Travel Bybit website, which is basically where you can book your travel, it's kind of like Expedia that we have here in the US. It's pretty popular. Travel Bybit is actually powered by Binance, and what you can do is you can book your flight to Paris with BTC, Litecoin, or BNB. You can actually use your BNB to pay for travels using this site. And they have this new feature basically where you can preload a card, and that card you can preload with like Ontology or like a couple others in there. From what I remember, I don't have that up right now. Let me see. A couple other
BNB,
coins you can preload, and basically. Yeah, BNB, and you can use that to pay with crypto for your travel. So it's cool to see that Binance is doing that as well. So
CZ's always doing something. I mean, just trying to increase that
everywhere.
utility. Yeah, increase the utility of BNB.
Yeah, absolutely, man. I'm getting I get a lot of comments today about those Chinese presents coming back too, and that's why we dipped. So super interesting. The Chinese presents have been gone for 2 years, or they've been spending it for 2 years, one or the other. But yeah, so this was a great episode, man. We got a lot. I think we went in depth on a ton of different topics. If you guys want to hear about certain topics, please feel free to comment in the comment section there. We always look for you guys commenting so that we can kind of go down those rabbit holes. Those are fun to get down. But if you guys are still here, please like, subscribe, comment on the channel. It really does help us with that YouTube algorithm. You can find us on iTunes, Spotify. I'm going through it all, fellas, but just in case I missed something, do you guys want to say something before we go outro?
Well, tomorrow. Oh.
Yeah, Dimitri's desk. That's more important.
Tomorrow, Dimitri's desk, 5 p.m. Eastern. Exactly 5 p.m. Eastern. Not a minute later, not a minute earlier. It's going to be 5 p.m. Eastern. There's going to be no cam because I'm traveling. And also, I don't have a beard, so the cam will be disabled. But we're going to run through all the charts and we're going to look at the technical stuff. So definitely tune in for that.
Yeah, don't forget $250 Bitcoin giveaway at the end of the year. Nice little New Year's Eve present. You won't have to cash out, for your Valentine's Day presents or whatever kind of weird narrative people are pushing these days for the BTC dip. But yeah, subscribe, comment. That's how we see you engaging, whether it's live or after the fact. So yeah, we'll always see you next week, and don't forget to listen to our latest interview this week with Tezos, which will certainly be interesting to hear their thoughts on kind of the resource issues and whatnot that we talked through on EOS.
Absolutely, man. So this was a great episode, guys. Good job. Yeah, until next time.
Boom.